Hello everybody, Alex here. Welcome to my finance and accounting education channel here on YouTube. Today we are going to talk about the March developments in the capital markets. Basically, March is over. We are already in April, and we have some results which are surprisingly positive. But before we jump right in, I'm going to ask you to subscribe to my channel, to hit the bell notification button, and you will never miss an update on my site. I do them quite regularly these days. You should expect new and hopefully interesting videos from me on Tuesdays, Thursdays and Sundays as well. That being said, let's jump right in. So we have March 2022 with positive trends, and I think we are back to the bull market unless something bad happens in April, and I see no real reason to continue with this streak of negative months. If we are talking exactly about the red periods, we started around the mid-January and it lasted till the mid-March, with a surprising comeback at the end of the March. From calendar months perspective, we had troubles in January and February. March in total was a positive month. Let's just say that whatever happened in these 2 months between mid of January and mid of March was not entirely but almost in full reversed in just 2 weeks at the end of the March, which is surprising because it just proves that no one can predict these things and when they really happen. And let's just go right in with the global context. So not many points from this slide have changed, or not dramatically, since January and February reports. So inflation remains a problem throughout the world, Europe, United States as well. Supply chain logistics and logistics problems are still up due to the COVID pandemic. We still haven't recovered that much. Moreover, China, which is one of the largest manufacturers in the world, seems to have specific and right now COVID problems, which are determining the production to be stopped and hence aggravating these troubles. However, it seems that the economic growth and the employment seems to have stabilized and to be on a good track. Even the Fed from the United States thinks this. For example, in March in 2022, so the last month, we got 431,000 more jobs in the United States, which is a very good number. The energy prices are still growing. So the OPEC is refusing to increase the production. We have the Ukrainian conflict and so on and so forth. The central banks are expected to start making some moves against the inflation. The European central bank is a little bit silent on this, which is a little bit worrying from my point of view, because the inflation in Europe has also started to pick up. The problem with the inflation is that it's caused from the offer side. It's not just a direct result of having a lot of money printed and thrown into the markets during the pandemic, but we have problems with the offer, so with the supply side, and not really with the demand. And central banks are cautious because, one, they can affect a lot the economic recovery by doing large rates increases and reduction of balance sheets or taperings. Second of all, they can affect companies which need to invest to recover, including the ones which are in the logistics. And third of all, guess who's going to suffer if the interest rates increase too fast and too much? Of course, the governments, or the public debt, which needs to be somehow financed, and the governments will have to pay more interest for the debt that they have accumulated in the past 2 years and even before. So it's clear that inflation is no longer transitory. What Ms. Lagarde was previously saying, that in Europe it's only 2.6% and we don't have the same phenomena as in the United States. It's now already at 6.9%, was for example, in Austria in the last month, and it doesn't look like it's going to stop. And we are expecting higher interest rate hikes for example, 50 basis points in United States are expected since May, so starting with May 2022. The pandemic, except the problem which I just told you about the China production and the fact that the production needs to stop in several locations due to the specifically due to the increase of the number of infections, is so the pandemic seems to no longer be in focus or a fundamental problem. What is still keeping the headlines is this weird war that was started by Russia in Ukraine, and it's already lasting more than 1 month. So it started on 24th of February, and it doesn't look like it's going to end soon. So we have problems there with the sanctions, which are expected to somehow slow also the European economy. We might get troubles with energy, especially with gas and oil. The Russians have demanded for their products to be paid in their local currency, which is weird. There are some troubles with the semiconductors, some rare gases which are needed for semiconductors industries are extracted from Russia and also from Ukraine. And also there might be some troubles with the basic agricultural products like wheat and so on, because it seems that Ukraine and also Russia are some of the world's largest producers of such products. That would be, in short, the global context. The winners and the losers of the past 3 months, so we are not talking only about March. So it was a clear exercise in seeing that timing the market. It's almost impossible. It's a difficult gameplay. It would have meant selling before or close to the mid of January, when the market was at the peak, and buying everything back, let's say at the beginning of March, when the market hit the bottom. And the trouble is that you never know when these peaks and bottoms are reached. Who lost a lot? Of course, the people that bought when the thing started to go, that sold everything when the thing started to go down. That's panic selling, the fear, especially if they sold somewhere in March, at the beginning of the March. You got more or less neutral results if you stayed invested and you did nothing else and you just waited. And of course, the winners are the ones that added to their portfolio, especially in late February, beginning of March, and because now they see the recovery and they have reduced the average cost of their portfolio, and now they are going to benefit from this rally. Now going directly to the market, so we have the S&P 500 grew by 5.21% in March. You will see a very interesting development, because somehow it turned back in the last 2 days of the month. Yeah, so S&P 500 plus 5.21%, Dow Jones plus 4.15, industrial average. Also the turning point at the end of the March, the 2 days which started to which were also in red. Let's hope that this will not be the trend in April. I told you that I see absolutely no reason, unless something unexpected happens, to have a downwards trend in April as well. Then we have the NASDAQ index plus 5.8, so quite significant growth, let's say, also in NASDAQ. The German index plus 367. FTSE 100, so this is the London Stock Exchange, plus 2.53, and the CAC 40 from Paris plus 4.12. On my actively managed portfolio, after taking a 2.62 beating in January and the 3.88 beating in February, in March I got a 4.12% growth, so a positive one. I haven't recovered all the losses, but most of them, and I'm quite optimistic and positive about how this the next months and the entire year will turn out. That was it for today. I hope you enjoyed the review of March results. So what happened with various stock exchanges around the world. I was just thinking if maybe I shouldn't add to this analysis some other two stock markets which are relevant for me, being the Taiwanese one, although TSMC is listed on NASDAQ. That's probably why I don't really need it to add it. And I was thinking also maybe about the South Korean market, because I have Samsung, and maybe that would be interesting to add. Once again, my name is Alex Petescu. You can support me by liking this video if you like it, by sharing it with somebody that might be interested about this topic, also by commenting in the comment sections if you have something to add. But most importantly, do not forget to subscribe to my channel and you will never miss an update. I do them quite regularly these days. You should expect new and hopefully interesting videos from me on Tuesdays, Thursdays and Sundays as well. Below this video you have links. You can create an eToro account and trade their CFDs, which are derivatives for shares, so they are not really shares, but they are still fun. You can trade there without a commission or a fee, which is a saving always, no matter how often you are trading. Once per month or once per year, not paying any commission or fee is always a saving, so a benefit for you. Below that you have another link with an Amazon wishlist with hardware and software items which can help me improve the quality of my videos, thus making it beneficial for you, because you will absolutely normal, you will get better videos from me. But let's just be honest and say that this wishlist is the most inconvenient for you. From financial perspective, the easiest way through which you can support me is to subscribe to my channel, and of course to continue to hit the bell notification button, and of course to continue to watch my videos. Once again, my name is Alex Petescu. This is my finance and accounting education channel. I hope you liked the video from today, and I look forward to presenting to you with the next opportunity. Goodbye!